Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I will be sharing my BTC price prediction and analysis because at the moment we have quite interesting price action. Now, starting here from the monthly time frame, what do we have? Here in the monthly, we can see how at the moment the market is testing very strong monthly demand and support. In fact, from here, the market started all this move to the upside. Again, here, the market tested its zone and rejected it to the upside. And at the moment, we're testing once again this exact same level of very strong support and demand, from which our rejection to the upside definitely seems possible. Going down on the weekly time frame, what do we see? Here on the weekly, we can see a very strong impulse to the downside, which indicates that the market at the moment could easily be overextended to the downside and in need of a correction. In fact, no market just goes straight down. You will usually see corrections along the way, and those corrections are exactly what makes the market create a downtrend. In fact, when you have a downtrend, you have a series of lower lows and lower highs. So every time that you have an impulse, you're supposed to get a correction before then the continuation lower. And since we just got an impulse, what we could expect at this point is a correction. Now, if we want to measure this correction, what we have to do is take our Fibonacci from the high to the low of the impulse. Now, if we do that, we can see how we have a 0.32 Fibonacci retracement currently lining up exactly at this zone. Now, this would be the first level that we expect the market to retrace to before then print the continuation lower, meaning that at this level, this is where we would have our first upside target. Now, going down on the daily time frame, what do we see? Now, here in the daily time frame, things get very interesting. In fact, what we can notice is that the market seems to be inside of a horizontal accumulation phase. Now, why do I say horizontal accumulation? First of all, we can see that the market has been moving sideways for quite some time now. And if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see is that lately, even though the price has been dropping, and we see that clearly already from the chart, which is the black line here, the black line is the price, the amount of Bitcoins on exchanges, which is actually this purple line, has constantly been falling as well. Now, what this indicates is that even though the price is dropping, meaning that we're seeing massive selling pressure, all that selling pressure is actually getting absorbed by the market, and even more than absorbed, because the net amount of Bitcoins on exchanges is actually continuing to decline, meaning that we're seeing a massive amount of Bitcoins being bought, which are all the ones that are getting sold, plus more, and moved off from exchanges, possibly in cold storage. So we're seeing a massive amount of buying pressure around this area, which could easily trigger at least a short-term correction to this zone. Now, in order for the market to do that, at least we should be able to break daily structure. Now, if we look at the structure on the daily, this is resistance, again resistance here, again resistance here. Now, if the market actually manages to successfully break and close above this resistance, which we still don't know if the market will succeed in doing that, but if the market will succeed in breaking above resistance, we know that previous resistance, once it is broken to the upside, is supposed to be turned support. So if we will actually have a successful break and close above resistance on the retest of this previous resistance turned support, this is where we could be looking for a potential rejection higher. Now, how we could be doing that? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection higher for the completion of this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.